Good evening, guys. Currently, it's around 9:30. Let's look at today's Bank Nifty as well as Nifty daily analysis. As you can see, the market today gapped down. As you can see, on previous day, where the buyers couldn't hold the price here, price after this bullish momentum, price took support at 550 level, and it's here at 0.05, 0.5 and 0.6 level. The market faced rejection, couldn't cross above this high, and you can see selling from the here. The market continued to sell further downwards, and what you can see here is that today the market gapped down around 400 points, and this was just a pullback after this impulsive move towards the downside. And you can see after this market even couldn't cross this level, clearly signifying resistance over here. And what we need today is that as the market gapped down 400 points, there is not much liquidity for the market to head towards the downside, because as you can see, all those people who might have bought here, they might have exited their positions, or the people who might have sold puts here, bought puts here, they might have been in profit. So we need buyers to enter the market to initiate buying. Only then we can take out those sellers who have started their positions over here. So as of now, you can see as the market gapped down 400 points, there is no many buyers over here. So what happened is that to target all those sellers, the market has to go up and target those sellers to grab liquidity over here. So what happened is that if you try to plot the first candle fib, if the market sustained above the first candle fib, you should look for long positions. Or if the market is trading below the first candle fib, it's better to look for short position. Or in sideways market, if the market is trading between these two zones, the first candle fib zone, it's better to stay cash nice, not to take your positions. And you can see the market, if you try to plot the fib level, angle gap level here, and the 5-minute zone as well. So let's plot the 5-minute zone too. And this is a 5-minute zone. You can see clearly the market is taking support from either the fib of the first candle or the 5-minute zone over here. After this impulsive move, you can see this structure clearly broke sentiment towards the upside, clearly indicating the market is going to be bullish from here on. But this candle was clearly bearish, guys. A lot of people, after this price rejection, after this dodgy formation and this impulsive candle towards the downside, might have entered short positions, expecting the market to further sell towards the downside, since even Nifty was even bearish. But what happened in Bank Nifty was, after this bearish candle, you can see it following another bullish candle towards the upside, clearly changing the market sentiment from downside to the upside. And if you try to plot the fib levels of the first candle, of this impulsive candle, this broke towards the upside. It broke the VWAP structure, it broke the 0.5 and 0.6 zone, as well as this first candle fib. And you can see after this, the price faced some kind of rejection from downside, expecting the market to go further high, as the price couldn't even cross the fib of the first candle. And you can see clearly the market broke structure here towards the upside. And this is a breakout structure. And if you mark the last down move, you can see clearly this is the last down move. And after this impulsive move, the high chances the market would face rejection from any of these zones, like the 48,000 level here. And the market would have continued further towards selling towards the downside, expecting new lows. But what happened is that you can see this selling over here was not of impulsive selling. You can see this selling towards the downside as a balanced selling with no clear fair value gap or any break of structure towards the downside. And you can see the market came all the way to this demand zone, the last down candle before the afternoon, or the first fib candle, the day fib candle, or the 0.5 as well as 0.6 zone. Or you can expect this first candle's fib over here also. It came all the way here, and it's here. After that, the market moved towards the upside, clearly breaking the structure here. This is another break of structure towards the upside. And after that, the market retraced here, took support here. This is the VWAP level. And if you try to plot the fib of this candle, the last down, this is where you could have plot the 50 level. And you could have looked for long position here, keeping your stop loss just below this after this candle, and targeting, let's find out the fib extension levels, the common point between these two candles, the common point between these two candles, as well as the common point between these two candles. And usually the market would reach all the way to the 100% level. You can see in a single move, the candle went all the way to 100% level, or you can usually target the 1.618 level. You can see clearly the market reached all the way to 1.618 level and faced rejection over here. So you can clearly target this zone. This is where you could have taken your long position here. Looking for support over here. You can see this impulsive momentum towards the upside. And this is one trade where you could have taken long position. And for conviction of the price, you can see the last down candle, the common point between this and the common point. And from here, you can see price taking support from 550 level. And again, trying to break structure towards the upside here. Clearly indicating the market sentiment to be bullish. And if you look for confluences, you can see moving averages. Here, though, moving average confluence was not well established here, since the market has capped on too much. And after this doji formation, the inverted hammer candle, you can see clearly that the bullish sentiment has been exhausted. And even after price taking support from this 550 level over here, you can see there was not much impulsive momentum with fair value caps, clearly indicating there is no much bullishness. If the market would have taken support here with very bullish impulsive candles with fair value gaps, as you have seen here, there would have been a good sentiment that the market would continue further buying towards the upside. Usually, market would face resistance over this closing level, or there are high chances the market would even face resistance over the pivot level. So if you consider yesterday's high to low, and you can expect the pivot level might be around this zone. This might be the pivot level of today. So you can expect the market to reach all the way to this pivot level. But what happened here is that the bullish sentiment has been exhausted, and you can see clearly the doji formation is clearly showing price rejection over here, or you can expect it as the breaker block level as well. You can see clearly this candle. This is a breaker block, and the high chances if the market would be bearish, this support might have acted as resistance over here. And this is how the market formed doji over here. And you can see clearly after that the market continued further downwards, and the market came all the way down here, changing the market sentiment from bullish to bearish. But what we need to know is that all those sellers who might have sold these positions from here to all the way here might have placed their stop loss, they might have placed their stop loss here, and those buyers over here might have entered long position. You can expect this as very good buyers over here. These are very good buyers, guys. So if you try to place the anchor view up towards here, this dash down, you can see clearly here that the market, after taking support from the first candle's flip, the market rallied upwards. Again, tried to break towards the downside here, and it clearly broke this anchor level. We were towards the downside. But as I have told you earlier in my videos, if any such candle appears, you can see following candle of equal size, which is engulfing the previous candle or piercing candle, clearly changing its sentiment from bearish to bullish. And you can see here also the price trying to take support. And if you try to plot fib also, you can see clearly it's around the mid. Or you can keep it as the PDRA. You can see these last three candles as well as these last bullish candles. And if you try to plot this PDRA, there are high chances the market would take support from this PDRA and try to go higher. And you could easily target 100 or 1.6 level. The common point, as there is all the highs and lows are blue, so we can easily keep it from these positions. As you try to plot the fib extension levels, you could have targeted all the way to this fair value gap or this last up candle, or you could have targeted the 1.68 level. See clearly the market came all the way to 1.68 level, clearly showing that the market sentiment is being bullish. And you can expect this last down move, which clearly broke structure towards the upside. And this is a chalk formation. And if you try to plot the fib levels, the common point, or you can take the low all the way high, you can see clearly that the market took support below 50 level here, and you can see clearly the market tried to break VWAP level over here. But what happened is a further bullish candle towards the upside, breaking, engulfing all these three bearish candles. And after this, a lot of buyers would have entered the market, expecting the market to go further high, but to target this swing breakers over here, the swing buyers over here, looking who might have entered long position looking at this candle, the market came again down, targeted, took a sell off those buyers who might have entered long position over here, and further, you can see after this bullish candle, the market went all the way, taking its liquidity actually. There are high chances that the market would have taken this liquidity. You can see clearly the market took this liquidity over here. And we can expect the market to take this liquidity as well. As you can see further, the market took all the way that liquidity. And if you try to plot the fib extinction levels, the common point between this, the common point between this, and the common point between this, you can see the market went all the way to the 100% level over here. Or you could have expected the market to reach all the way here, but the market didn't reach here. So the high chances after taking this liquidity, you could have exited your long position, or after seeing this very simple candles towards the downside, or you could have tried your stop loss all the way here. And after this bullish momentum, you can see the market trying to head down as this last buy candle. There was no much further buying, and the market retraced towards the downside, clearly changing market's perspective from this bullish candle. But what happened is that you can see clearly after this down, the market again rallied up, again it went high, again it went down, again it went high. And this kind of consolidation, you can see clearly there is no much bearishness over here. And followed by that, you can see the market came all the way to this anchor VWAP level over here. And the price took support from this anchor VWAP level at the 48,000 level here. And you can see another solid bullish candle formed here, and clearly showing that this demand zone over here. And the price also breaks structure towards the upside, clearly indicating that the market sentiment is being bullish over here. And large down move, you can plot it as this, and you can see the market took support from the fib level of this impulsive candle. And if you want to have a short scalp, you could have taken the common point between this, the common point between this, and the common point between this. And you can see clearly the market came all the way to 1.618 level, and from here the market tried to reverse. Look at this, guys. This is 1 minute order block. Even here the market sentiment is being bullish, as you can see clearly price taking support from the 50 level. And you can see after exiting this position at 1.68 level, the market clearly rallied towards the downside. And you can see this kind of impulsive candles towards the downside, clearly indicating the market to be bearish, but only but here was just a trap, as you can see clearly the market again took support from here, and only to initiate buyers to enter the market all the way rallied towards here. But after this bullish candle, you can see an equal size bearish candle over here, trying to engulf all those buyers who might have entered here, expecting the market to go further high towards the new highs. But you can see clearly another piercing candle, which pierced more than 3/4 of this previous candle, and closing below this candle, changing the market sentiment from here, from being bullish to bearish. And if you try to plot the anchor VWAP level over here, you can see clearly the market came all the way here. And if you try to plot this zone over here, you can see clearly, if you consider this 9 as well as 21 moving average, the market closed below this zone, clearly forming chalk. And you can see this upward momentum as the price couldn't cross this 9 as well as 21 moving average, and price rejection from this candle. You can see expect the market to go further low towards the downside, targeting this liquidity. And you can see clearly the market took this liquidity. But actually, this is a sideways market, guys. You can see clearly the market is trying to go in sideways. There is no clear sentiment that the market is either bullish or bearish. But you can see clearly from here the market faced some kind of rejection towards the downside. So if you try to plot the fib levels, the common point between this and this, and you can see this is the 0.5, so that's 0.6 zone, and this is the 50 level. And you can see price taking support from this anchor gap level. Since here you saw price taking support over here, here you can see, here you can see, here also you can see, and here you can see price facing rejection from this anchor gap level. And again, after this bearish momentum, also price taking support from this level, clearly indicating that the market is being bullish. And you can see clearly after this bullish momentum, price retraced back, clearly broke structure towards the upside. It clearly indicates that the market is being bullish over here. This is another breakout structure, the down move after. But what happened is that the market faced rejection over here, the 350 level over here, as those buyers who have entered the market here, or the buyers who might expect the market to go further high, couldn't hold on to price. And you can see following this bullish candle, a lot of buyers might have entered the market and looking at the support. But what happened is that all those buyers and the sentiment has changed, followed by another bearish reversal candle over here, clearly engulfing this previous bullish candle. And you can see another candle trying to take support from this level and trying to head higher, but it couldn't cross this high over here, and it clearly found choke over here, clearly breaking structure towards the downside. And again, the market tried to play between this range, between these lows and these highs. As you can see, the market tried to move towards the sideways range. And you can see the last up move before the down move, which broke structure towards the downside. So try to take this level off. And if you plot this zone here, this is the last up move, which broke structure towards the downside. So you can consider this to be a 1 minute order block. For the order block to be respected, as we have said that after price breaking this choke towards the downside, usually there should be a retracement, like there should be a pullback or any mitigated zone over here or any inducement zone over here. But here there was no inducement, as there is a clear sell-off towards the downside. And this retracement, like this touching the order block and trying to head lower, this never happened here. But what we can expect is that as the price took support from this curvy pep level, the price clearly rallied towards the upside. But here the market faced rejection. As you can see, you can actually consider this to be the last up candle before it broke structure towards the downside. It faced rejection over here. And again, you can see the market again broke structure towards the downside, indicating clear break of structure over here. And if you consider the last up candle over here also, this is another 1 minute order block. And again, the market, after breaking this support, again went all the way here, faced rejection, as this bullish momentum couldn't continue further buying, and faced rejection at this anchor gap level. And again, it broke structure towards the downside, clearly indicating the market sentiment to be bearish. And after taking support at the day VWAP level, this is the day VWAP. You can see this is the day's VWAP. Again, the price took support here. Again, faced rejection at this, as it couldn't cross over here. And this is another order block over here. This is 1 minute, another order block. You can see clear back-to-back order blocks over here, which has all been mitigated. And there is a lot of weakness over here. So if tomorrow the market will gap up, and there are high chances the market will continue further bullish momentum, or if the market gap down, there are high chances the market will continue bearish. Or for tomorrow, I'm definitely looking for bullish momentum. As you can see, you can expect the pivot ranges to be around this zone. This might be the pivot range. The high chance the market would target all those sellers who have entered the market here. The market might gap up around 100 to 200 points here, and there might be slight retracement towards here, and the market would continue further bullish momentum. Will gap up, retrace like this, and continue further upside momentum, taking this liquidity, targeting new highs, guys. The high chance that the market would go further bullishness. And here you can see another break of structure towards the downside. And again, the market took support at this day VWAP level and tried to head higher. But here you can see clearly After this huge bullish candle, there was not much buying pressure, and following this candle, which broke this anchor gap level as well. And after this break of this candle towards the downside, you can see clearly three dodgy candles found, clearly indicating some kind of trendline liquidity over here. As you can see, after this candle, this is price facing rejection from this 50 level, and this is another manipulation. After this bullish candle, some people might have thought that the market sentiment was going to be further bullish, but market targeted all those buyers who have entered the market here, expecting the market to go further, as all these zones has been mitigated. And you can see another, as you can see clearly, the trend line liquidity also been broken towards the upside. You can see here resistance, here resistance, here resistance, here resistance, and the price retraced back, broke. A lot of buyers who have not traded based on trendline liquidity might have entered the market after seeing this. But what we need to see is that if the market sentiment is being bullish, the high chance that the market would continue further like this and breaking all those structures and retracing here again, taking support and further continuing towards the upside. And on this retracement only, we need to take long positions, guys, not on this break of levels. Here you can see this kind of manipulation here at around 219, the same candle which has appeared here. Look at this, guys, at 205. On the previous day, you can see these two bullish candles, clearly expecting the market to go further high. You expected the market trying to take support from here. The same candles had appeared like this. You can see clearly the market trying to head upside, initiating buyers to enter the market. But after this bearish candle targeting all those buyers and this retracement, you could have easily entered a short position over here, keeping your short position over here, keeping your stop loss just above this. As you can see, price rejection, and you could have targeted this swing. You can see this swing structure. You could have targeted the double of this swing structure. As you can see, all the way from here to here, you could have targeted all the way here, guys. See clearly, this swing high, you could have doubled, targeted. But what we can see is that after the market even broke structure towards the downside here, clearly indicating the market is bearish only. Here you can see another break of structure. And market retracement, you can see clearly this is a day VWAP, price facing rejection from this day VWAP, and you can see further downward momentum. And you could have exited once if you see this bullish engulfing candle over here. You could have exited your long position, short positions over here like this. This is one such beautiful trade where you could have taken short position. Here you can see the market is targeting between this range, both buyers as well as sellers. The people who might have sold here, all those stop loss has been hit by this one go, and who might have bought here, all those stop loss might have hit in this downward momentum. As you can see, the market clearly trying to take out SLs of both buyers and sellers as well. And one long position is here, guys. This is one long position where you could have targeted, expecting the market to go all the way to 1.618 level. Here is another long position where you could have taken, targeting this swing high structures over here. This is where you could have targeted, or you could have targeted this 100% level also. This is one scalp you could have easily taken. And another structure is here. You could have gone all the way here. This is what I've explained. You could have taken this long position after rejection of price on this anchor VWAP level. And you can see clearly the market is facing resistance. You are not able to cross. But what we can see is that after this bearish candle followed by another bullish candle, you could have entered long position here after seeing this bullish candle and targeting towards the high. And after this break of candle, the retracement again, this bullish momentum, targeting this high, this liquidity, the last up move before the down move. This one you could have targeted again, this scalp, and during the second of the day you could have targeted this position. This was here also you could have targeted, but this was very rapid fall. Let's keep it as like that. This is about Bank Nifty, guys. You can see 1, 2, 3, 4, 5. Based upon our trade analysis, is how the market moved. And coming to Nifty, guys. In Nifty, you can see clearly that the market initially tried to move upwards, initiating buyers to enter the market over here. You can see if you try to plot the fib levels over here, the fib of first candle, and if you try to plot the 5-minute range, the 5-minute range over here, the common point to trend is, as this is a bearish candle, always we need to plot from up to down. And you can see clearly this is the 5-minute zone, and this is the 5-minute range, fib of first candle. And going to 1-minute zone, you can see clearly, guys, the market phase rejection over here, try to head over, but let's keep that in mind. You can see clearly that the market formed some kind of trend line liquidity over here. You can see clearly, and you can see clearly this was a huge bullish candle engulfing the previous candle, and you can see retracement over here followed by another piercing candle of the previous bearish candle. If you try to plot the anchor gap level, you can see clearly the market broke this structure high over here. This is one break of structure. And if you try to plot the last down move before the up move, you can see price trying to take support from here, the 50 level, or let's just see the common point between this as well as the common point between this. If you can see, the price retraced back here and trying to break structure towards the upside. So if you try to plot the fib extension level, the common point between this, the common point between this, you can see clearly that the market is trying to face some kind of rejection at 0.5 as well as 0.6 zone. This is the 0.5 and 0.6 zone. We should always be careful of this zone because a high chance that the market would face some kind of rejections over here. If the market sentiment is clearly bullish, a high chance that the market would go target the 100% level or the 1.618 level further higher. But here you can see the market couldn't cross this 23,000 level, clearly indicating the market sentiment is bearish. And the market again took support over here. But what we need to see is this trend line liquidity over here. You can see clearly there is a trend line liquidity and this bearish impulsive momentum towards the downside. I can see clearly the market is trying to break this structure towards the downside. And if you try to plot the last up move before the down move, this is 1-minute order block, clearly broke structure towards the downside. And as we have told that when the market tried to retrace to this order block, you can see there is a lot of pullbacks. And finally the market reached this 1-minute zone. And after this rejection of price, you can see clearly this is inverted hammer, a doji, and market tried to engulf both this inverted doji as well as hammer candle with this bearish candle engulfing previous 3 to 4 candles. And you can see clearly that after this candle, if you try to plot the fib levels over here, the market couldn't cross the fib of this impulsive candle, and you can see this retracement towards the upside. Retracement towards the upside. The market tried to take support from this level. Again, it broke structure towards the up downside. Again, the market tried to rally upwards but faced rejection of this trend line. You can see the market broke here, tried to take support. Again, it broke here. Again, tried to face rejection. Again, trying to go down. So the people out there, you could have easily taken short position here, seeing this rejection, and you could have taken short position here, keeping your stop loss above this candle, and you could have targeted the fib extension levels, the common point between this, and the common point between this. You could have targeted all the way to the 4.23 level. Look at this, guys. The market came all the way to 4.23 level. And look at this confluence, guys. What more confluence you need? But in case if you missed out in this position, you could have tried to plot the fib levels from here to here. And you can see after this break of the structure towards the downside, breaking the first candle's fib as well as 5-minute zone, as well as this fib support levels over here. And this 1-minute order block, the last down move, which broke structure towards the upside. This is another break of structure towards the upside. So you can see clearly this zone is very important. When this structure is being broken towards the downside, you could have easily entered short position here also. keeping your stop loss, just above this candle, targeting this same zone only, guys. This is one thing where you could have easily targeted, but you saw it, guys. Clearly, it came all the way to 4.26 level. Or if you could have seen in confluence with moving averages, you can see clearly the price couldn't cross the 50 moving average over here and facing multiple rejections over here, and it breaking the structure, the order block. Again, the market tried to take support up the day wave level, but here they turned down liquidity rejection, and the market clearly rallied towards the downside all the way to 4.26 level. And I hope you got this trade, guys. You could have tried all the way as long as it doesn't cross this 9 as well as 21 moving average towards the upside. Here you can see this swing clearly crossed it. You could have exited anywhere between this. But after this break towards the upside, you can see clearly the market broke, found a chalk over here. And if you try to plot the fib levels, the common point between this and all the way to here, you can see this is one fib levels over here. So this is the fib level, where high chance that the market will face some kind of rejections over here. But what we need to see is that you can see after this impulsive momentum towards the upside, this is quite unexpected, guys. This kind of impulsive moves after this huge downfall. But this impulsive move was clearly bullish only. So after this impulsive momentum, you can see clearly on this retracement, the market with a lot of hesitation trying to head down, telling that the bearish sentiment has been exhausted. You can see after this candle, you can see another bullish candle over here, and after this small bearish candles, another bullish candle towards the upside. You can see there is some kind of buying pressure over here in spite of all this selling pressure towards the downside. And if you try to plot the anchor VWAP level over here, you can see clearly the price took support here. But before price taking support, we could have easily entered long position before that. You can see clearly this trend line liquidity, guys. This liquidity over here. And if you try to plot the fib levels from the common point, the high and low, as it is more black, you can see the price retraced as this is a deep retracement, clearly indicating there is no much bullish momentum, but clearly there is some kind of bullish momentum. You can see the market retraced to 0.786 level, which indicates that there is not much of bullishness, but definitely there is some sort of bullishness. But after this break of this candle towards the upside and breaking this VWAP structure, this trend line liquidity, you could have entered long position, guys, keeping your stop loss just below this candle itself. And if you try to plot the fib levels, fib extinction levels, the common point, or the swing structures itself, you could have targeted the 100% level here. You can see clearly the market came all the way to 100% level here. Or you could see the market came all the way to 1.6 level as well. This is 100% level, this is a 1.618 level. And say after this bearish breakdown, followed by another bullish candle, again another bearish candle, but which is followed by another bullish candle, clearly indicating some buying pressure. And you can see further continuation of upward momentum from here on. You can see the last down candle which broke structure, this swing structure over here. This is another break of structure. So the last down candle is this candle, guys. This is 1 minute order block over here. So you can see as the price reached towards this order block, you can see rejection here. Again, it tried to break here. Again, the market consolidated. Again, the market tried to here, moving here. You can see that when the price tried to reach the order block level, there was no such downward impulsive move, as there is some kind of upward move before the down push, and it reached here. So if you try to plot the the swing levels, the high, here the high, or the his high, you can clearly see the market went all the way here, the 100% level. Or in case if you try to plot the common point between this, the common point between this, or the common point between this, you can see the market went all the way to 1.68 level, or you could have targeted the previous 1.618 level, or the 200 moving average. It's where you could have targeted, has there high chances that the market would face some kind of rejection from this 200 moving average or the daily VWAP level, or after this consolidation, a huge bullish break towards the upside. Here you can see when this looks like a last sell-off candle, This is how the market would have faced some sort of rejection and would have targeted all the way to this 0.5 line as well, this zone. And you can see here when the price reached this level, again the market clearly rallied towards the downside, followed by another bullish momentum towards the upside. But here it clearly faced some kind of rejection from this 200 moving average. As after this bullish momentum also, there was bearish break of structure towards the downside, which looked like a final sell-off candle. But here also you can see this is looks also like a final sell-off candle, as those buyers are selling off their position. And after this momentum also, there was not much buying, as the price faced rejection from this level and continued further towards the downside. And you can see clearly this swing structure, which actually broke this low, clearly breaking this break of structure towards the downside. And after this, you can see there are multiple rejections, small dodgy candles formation here, rejection of price from this 9 as well as 21 moving average. So you can see one resistance level over here, another manipulation, initiating buyers to enter the market, as well as another break of structure. With all these three sentiments, you could have entered short position here, keeping your stop loss just below this 200 moving average. As you can see, price facing rejections from here, and you could have targeted this low, or you could have targeted this zone, the 1 minute order block zone. This is where you could have targeted, and you can see clearly that this order block also, once the order block has been mitigated, this order block loses its value. So you can see clearly the market even closed below this level. This is how you could have targeted your long position over here. And this is 200 moving average resistance. And you can see clearly price taking support from here. But here it broke structure. Again, for price faced rejection from this and trying to break towards the downside. Here you can see clearly that the market broke structure towards the downside over here. And if you try to plot this swing structure, the last up move before the down move, or if you try to plot this swing over here, you can see clearly the market reached all the way to this level. Or if you try to plot this, the last up move, you can see clearly this is the 550 level. The price clearly faced some kind of rejection from this zone. And if you try to plot the anchor way up level here, the last up move, if you try to plot here, you can see the market face some kind of rejection here. But you can see with this kind of level, you can make a lot of confluence. As you can see, after this bearish bullish momentum, there was not much buying as the price exhausted near the 50 level. The same kind of exhaustion you might have seen in Bank Nifty also when the price retraced all the way. You can see this liquidity over here trying to break this zone, this VWAP, day VWAP, anchor VWAP level. But it was impulsive momentum towards the downside, and this kind of upward momentum clearly indicates that the market is clearly bearish and there are high chances that this liquidity will be taken out. So it's better to look for short position only. And you can see after this bearish candle trying to break all those buyers who might have entered here, you could have entered short position here itself, targeting this low, and this is one quick scalp. But if you try to plot the order block level over here, this is the order block. As you can even plot the whole zone as the order block, because you can see this bearish engulfing candle also played an important role. And you can see when price retraced back to this order block level, you can see there is kind of inducement zone over here. Again, the market kind of formed a trend line liquidity over here. Again, the impulsive momentum towards the upside. But here you can see this anchor you have faced some kind of rejection over here, and you could have another position, entered another position short here. After this bullish momentum and price couldn't cross this zone, you could have targeted this low. You could have targeted this low. This was another scalp you could have easily taken. Clearly, even here also it broke structure towards the downside. This is another break of structure. And if you try to plot the fib levels, as you can see here, this level to this level, you can see that the market faced some kind of rejection over here, the 550 level. And after this bullish sell-off candle, you can see this one is sell-off candle, this one the huge bullish momentum, followed by another bearish candles. You can see after this bullish momentum and dodgy formation, you can clearly make it out that the market sentiment is again bearish only. Or after this bearish candle, you could have entered short position, keeping your stop loss just above that high and targeting this low. Or you could have doubled, since it was 550 level rejection, you could have taken double of this swing over here. You can see clearly this double of this swing, and you could have called, came all the way here, and this is how you could have taken. Look at this, guys. It's one beautiful trade setup over here, another good setup, another good setup, another good setup, and here these are quite small scalping trades where you could have easily taken. This is about bank nifty, guys. Nifty 50. 1, 2, 3, 4, 5, 6, 7. And I think this one is really a wonderful trade setup. I think my knowledge over here is kind of helpful for you. If you like, please share this video, guys. And my knowledge is kind of helpful for you. Please try to use this knowledge, guys, for your trading decisions. I think it will definitely help you in a longer term. And with a lot of practice only, you will be able to master trading. So I think you will regularly make some kind of effort in trying to improve your trading decisions. And with better confluences and with better patience, there is a long way. And definitely you will be a successful trader one day if you make persistent efforts regularly, guys. Thank you.